What's going on YouTube, and welcome back to another Tire Trades breakdown. We have crawled back from the depths of drawdown. As you can see guys, from the month of October, we are up $671. We had a perfect week, no losses, win on Monday, win on Tuesday, win on Wednesday, and break even on Thursday. Friday was a no trade day. But yeah, this is exactly what I wanted, guys. Remember, I told you last week, the goal was just get back to zero. I was in minus 2.6% drawdown from this last few weeks have been horrible. Again, small losses, however, with good risk management. I already knew it's part of the plan, guys. Like I said, you have to be comfortable with taking losses. As long as you trust your strategy and your data, you should know those wins will come and they'll stack up. So again, I didn't really do 1% risk as I only have this one live account, so I need to be very, very conservative with my risk management. So the goal this week was literally risk about 0.5%. That's all I did, and just claw out drawdown, okay? I probably take profit a bit early because I need to shave away. The goal was literally just get back to zero. So I'm only minus $300, $400 now in drawdown, which is great. So I'm basically at that break-even stage. So now, next week, I'm hoping to get my first payout. But yeah, that's enough of the data, guys. I mean, for those, if you haven't seen already, I mean, my metrics in the last 2 months, I've made 18.5K. It's crazy. I passed a phase 1 FTMO funded account, so I have a live funded account. Again, my win rate is around 63%. More wins than losses. Great. Profit factors looking healthy. And yeah, the equity curve is good. Like I said, small little dips is part of the game. But the equity curve is really, really nice. I'm being very consistent with my trades. Win percentage is high. Profit factor is high. You know, the max drawdown, I'm keeping that within, check. So I'm not really getting into deep drawdown. And my recovery factor is really good. Like I said, guys, I know how to save accounts. This is the time now that psychology wise, I don't want to be in deep drawdown. I've only got this one account. Until I have multiple accounts, that's when I can be a bit more aggressive with my trading, but still within reason. Okay, just for now, the goal was to obviously risk 0.5 to get back to break even, which we've done. And again, even with being consistent and stacking these small wins, you can see the P&L is looking healthy. But yeah, anyways, let's dive into this week's trades. I'll explain all the ones that I took. As you can see here, guys, on the chart, gold, I mean, do I need to say anything? It has been rallying for the past 2-3 months. I mean, this is just flying. Whoever's trying to short gold, I mean, good luck. With my strategy, as long as there's, 2 breaks down on the 4-hour chart. So if, for example, price did something like this, where it broke down twice, then my bias will change to sell, okay? But for now, I mean, I'm looking at the chart. You got 1 break to the downside here. Okay, now this is 2 breaks to the downside. So now, coming into next week, I could be potentially looking for sells. However, on my broker chart, this is actually a bullish candle. So this is only 1 breakdown for me. So I'm going to continue to look for buys next week, okay? So this is kind of like what I would look for if I was looking for sell. So pretend this is a bullish candle, because on my broker, that's a bullish candle. We've only had 1 break to the downside. And as you can see, price is still rallying up. However, if we get kind of like this, a candle close below this swing low, then we have, 1 breakdown, and that would be your second breakdown. Okay, that's 2 breaks down, and then now my bias will shift from bullish to bearish. Okay, I know gold is technically due a retracement. I mean, we have been so bullish, so everyone is expecting it to sell off. However, like I said, guys, trade with the trend. The trend is your friend. You do not want to be shorting a bullish market. It's all about odds and probabilities, guys. What is a higher chance? Do you want to buy at a discount at these regions here, or do you want to sell when price is on this massive run up? I'd rather be patient and wait for buys when price reaches a discounted level. And that's basically my bias and what I'm trying to do with all these trades and how I've been trading. And this is why I've been so profitable for the last few months. Okay. Anyways, so that's the 4-hour chart. Let's dive into how it looked on the Monday. So if we go to the 5-minute, this is what I based my entry off. We're gonna have to go back. Here we go. So if we go to Monday's trade, this is Monday. Here we go. All right. So Monday I was busy. I had to take a trade in the London session, so I couldn't trade New York. So again, if it's London session, New York, Tokyo, Asia, I don't care what session it is. My rules, my trading plan, I have to wait for a liquidity grab after 8:30 a.m. Okay. Here, liquidity graph happened slightly earlier. However, I was pretty confident with my bias. Again, gold is looking, like I said, very, very bullish. I was looking at obviously higher time frame order blocks. However, price was just, it kept rallying on. So I'm dropping down to the 15-minute, 5-minute, and I noticed this. So as you can see here, internally, we're kind of bearish here. We got that kind of change in structure. So we got a break to the upside here. We got 2 breaks to the upside. So 2 back-to-back breaks. This kind of perked my interest. As you can see, it's close to my trading time. You can see liquidity is below this kind of breaker structure here because it created an order block here as well. Price grab liquidity, you can also call this a fair value gap. I don't really use fair value gaps. However, I saw this nicely, like, beautifully fill the fair value gap. And again, it respected this order block, even though it closed below this kind of swing low on the order block. It's only 1 breakdown. Like I said, for my bias to make this order block invalidated, it would need to do something like this where it's 2 breaks below this swing. That would now then invalidate this order block. However, I can see price respected the level, and again, break to the upside, strong volume, gave a little pullback. So now it gave me an actual, PA level. The reason why I need a bearish candle pullback is so I can have my stop loss protected, okay? In case price reverses, this low shouldn't get broken, okay? If it does, it means that, price is not trending up, and so that invalidates my bias and my trade analysis, okay? So because we had this bearish candle down, I am expecting price to obviously follow the trend and keep going like this, yeah? And obviously once liquidity has been grabbed, I'm not expecting it to grab liquidity anymore. Therefore, I'm expecting it to respect this price action level, okay? So that's the reason why this was my kind of entry. Again, my stop loss was around 45 pips. That kind of covered, like I said, the bottom wick, or just about. Noticed obviously because it's at the start of the London session, there's a lot of volume. Hence why I enter, because price is going to go either one way up or one way down, okay? So that was the trade. Again, I cut it short because I saw this was an all-time high, and usually when price reaches an all-time high, if we had a break, I mean, you know what I mean, there's always a risk of price reversing and dumping. So I was like, you know what, I need to cash out here. So it's only a 1 to 1.6, trade, risk to reward. However, I don't care, guys. My goal, like I said this week, was just to shave down and get out of drawdown, okay? So good win for me. I think I made around, what was it on the Monday? $657. Great work, okay? So again, just shaving down. All right, moving on again to the next day. As you can see here, this is the next day. This is Tuesday. This is now the New York session. As you can see again, price, multiple breaks to the upside. Internally starting to get bearish now. However, this is just internal structure. I'm not too phased by this. This is a 15-minute order block. Again, ideally, I'd love it if price, retraced to a higher time frame order block. However, because of how bullish we are, price is sometimes realistically, it's not going to reach those levels because there's not enough sell pressure. So you have to kind of use what you see and what the market is reacting to, okay? You obviously have an idea in mind. However, you need to adapt and make sure that you follow your plan. However, in my case, I know that a 5-minute or 15-minute order block can be respected as well. Like, it doesn't have to hit like an hourly or 4-hourly order block for price to continue rallying to the upside, okay? So again, like I said, internally bearish structure here. Tapping into that 15-minute order block, we had, again, a massive push-off reaction. So this is good sign. Again, we had a bearish candle close. However, this level, if you look at this is about like 70, 80 pips. It's too big, okay? My stop loss needs to be around anything less than 50 pips ideally. So what I do, I be patient. I wait for a better level. A lot of people would have FOMO'd here. They would have got wrecked, liquidated. Again, price grab, liquidity. Once more, tapping into the 15-minute order block. Now it's starting to break. This level is a lot better. Bearish candle down. So this level here, now my stop loss is covered. This is around, again, a 45 pip stop loss. So I'm happy. It ticks, again, my trading plan. The stop loss makes sense. I enter here. Again, ideally, if I don't wait for the 5-minute candle close here, I drop to the 1-minute time frame and wait for price to break the 50 EMA. I've done this in my previous videos, so have a look at that. But yeah, once the 1-minute closes above this kind of entry level and it's trading above the 50 EMA, I know it's go time. I know price is ready to rally, and rally it did. And I got, obviously, I wanted to with this one. So yeah, that was the trade. Again, that was around $566. So that was on the Tuesday. So again, yeah, nice little profit, just shaving. Like I said, guys, I don't care about, having it hit TP. I'm just all about just shaving, getting back to zero. So yeah, that was the Tuesday trade. As you can see, all these setups are relatively similar. Again, that's what you want, guys. Trading has to be boring. It's got to be mechanical, and you're following a set plan. All right, moving on to Wednesday. This was like textbook. The Wednesday price action, chef's kiss. It was beautiful. Again, as you can see here, very, very bullish. Even if you're looking at it as simple support and resistance, you can see this kind of level, price is not looking to break this kind of level. So anyways, we have a break of structure here. So as you can see here, it's not a break here. A wick transfer to this candle here. Obviously, that's a complete break. So brilliant. We have a break of structure. That means the order block's below here. We have liquidity resting below as a higher low. Any higher low is liquidity, guys. Once price again sweeps this liquidity, again respecting still this 5-minute order block. Remember, guys, if this order block is not respected, even if a candle closed below here, don't get trapped. It's not a sell scenario. Just because price is internally bearish, do not look for sells. If it did something like this, where it properly candle closed twice, so once below the swing and then twice below the swing, that's when I'm like, all right, cool. Price is really, really bearish, and I need to wait now for a new break in my favor. So I need to wait for price to do something like this to start to see a change in character and it trading back up. Okay, so there would be the break in favor, and then still I would have to wait for loads of steps to see and notice that price is rallying back up. Okay, anyways, like I said, we had that liquidity grab, we had a break up, we had a little bearish candle close. As you can see, this level is very nice. It's a small stop, 30 pips. I was very confident in placing my stop loss at 30 pips only because it covered this level and it just meant a better RR. So again, rode this for a 1 to 2. I could have let this ride for a 1 to 4. However, again, my plan was just to shave. Like I said, I'm trying to get out of drawdown, which I've been doing. So again, nice little trade, $800 for this one, as the RR was, again, beautiful. So this was a very textbook setup. I love to see trades like this. Again, yeah, price action was very clean, no choppiness, very smooth, you know. So yeah, as you can see, guys, a lot of these trades are very, very similar, and that's because we're just literally buying up gold every single day. All right, moving on to Thursday. So again, the next day, same sort of scenario, price tapping in and respecting this kind of order block here. You can kind of see it already from the cuff. So again, this also was a 50-minute order block, I think, as well on a higher time frame. But yeah, you can see price respecting this level. Again, we've got kind of like an entry here. However, this was again a London session, and I don't really trade London session, and I was like, the price was very, very choppy here. So I set my BE a bit early, and obviously in hindsight, I should have just left my BE. My trading plan says that once my price reaches a 1-to-1, which is here, that's when I actually put my stop loss to break even. However, I think I put it to break even when price was like around here, so just shy of 1-to-1, and that, yeah, that kind of made the trade kind of hit break even. If I let it play out, I mean, it would have hit TP. However, this is all hindsight. It was very choppy. Again, it's not like I'm scared of losing. It's just that I need to be a bit smart here. I've done so well this whole week to kind of like get out of drawdown. I wasn't willing to kind of risk profits for the week. I'd rather wait for a better day with better price action. So that's why I kind of moved my stop loss to break even earlier. And obviously, as a result, that white candle wick, you can see it here, just took me out. Okay. Again, I'm fine with that. I'm at peace with that. It is what it is. Something I could have done in future, yeah, maybe reduce my lot size to be a bit more happy with the risk to reward, and just accepted that if I lost, this part of the game, and I should have just followed my plan and not put my stop loss to break even if price hadn't reached my 1-to-1 yet. Okay, so again, that's just something to know in future. Again, Friday, I mean, if you look at my flipping data, man, Friday last week lost 1K. If we go back to September, break even the other Friday. Lost Friday, lost this Friday. Like literally the last winning Friday I've had was in August. Okay, so I mean, guys, Friday is very choppy. Is for me the worst statistical day for me to trade. So what did I do? I didn't trade. Okay, it's that simple. Less is more. Now we end the week strong, 2K up. Hopefully next week now, this is the week where I get my first payout. And all of this hard work and suffering, and if you're a trader and you know what I'm talking about, all of these years have finally amounting to something. I feel like it's all amounting to something now. So, God willing, we get our first payout and we start to accelerate, gain that funding. And like I said, guys, a road to 1 million. That's the whole purpose of this channel. It's a journey. I want to share my experiences with it, document it, because this is raw. This is real life. this is me putting myself out there, showing you my journey, you know, showing you literally real results, and this helps me keep me accountable and stay disciplined. Because yeah, man, it's tough, man. Trading is no joke, guys. I swear it is a grind, and you know what I'm talking about. You are probably going through this journey too. If you're someone that's still struggling to figure out, how to become profitable, I am working on obviously um, giving kind of my strategy out for free on YouTube. However, I will do this once I have like consistent. I'll be getting consistent payouts, and I'm in a stage where I'm like, in a good position with trading. Because generally, like, I'm still learning as well, and it'll be a disservice to kind of teach something that I'm still learning as well, if you get me. But my mentor is great. I mean, I'm day by day, I'm improving my skill set. I'm getting better, I feel. So yeah, I mean, like I said, I will try my best to make like in a month or two's time, maybe something like a little course for free on YouTube, just to go in detail on my strategy. But for the time being, just hit that like button, subscribe to the channel. Stay tuned to these trade breakdowns. You can already get a lot of info and value from how my strategy works off these videos alone. So I highly recommend keeping tuned and yeah, just adopting if you want, or backtest at least the strategy I kind of give out to you guys. So yeah. Anyways, with that being said, it's been your boy Tao. I'll catch you in the next one. Peace.